Hey guys, it's Nathan Birch here from B.Invested.com.au. It is December 2012 and a lot of people are emailing me, asking me about what I've been up to throughout the year. I haven't been as much on YouTube as what I would like to be and as what I'm normally on. With that, just wanted to touch base. A lot of people keep asking where do I see the market heading, what's happening in 2013, what I think is in store for us. I just want to touch on a couple of points today, looking at the outlook of 2013, at what's going to be happening. First of all, I'm seeing that the market's still very solid out there. Some markets are very depressed, which is great. I love those markets. Obviously, buying stuff that's below market value is always exciting to me. Buying stuff that's at a discount, distressed, and having a good rental yield attached to it is very important. Alongside this, I see that the top end of the market is pretty volatile out there. I've been recently picking up lots of properties in Queensland and parts of Queensland where developers have gone bust. Just recently picked up a block of 20 units for myself and for investors that we help out through our property investment agent service. Those things were listed on the market for between $450,000 for 2-bedroom units to $600,000 for 2-bedroom units, and anywhere from about $600,000 to about $750,000 for 3-bedroom units. The developer was in distress, need to offload them. We picked up 20 units for purchase prices for 2 bedrooms at $330,000, 3 bedrooms at $370,000. It's about 40% off the actual ticketed price of what the actual current market prices are in the area. There's recent sales up until 2 months ago at the higher levels. However, we picked these up in a bulk lot. In today's marketplace, penthouses with good views, 12 months old, 6 months old, they're just completed. They've got rental yields of 8%, and it's in a very prominent part of Queensland, in the lower parts of Queensland, around the Gold Coast, Sunshine Coast area. The deals are out there still. When there's a volatile market, it's good to come in and be able to negotiate in bulk and be able to buy things cheaper, whether it be by buying bulk, work on the relationships with real estate agents out there, doing a lot of research in the marketplace and finding opportunities where you can find things that are in the current market that are very below market value because there's volatility and people need to sell. So next year I see that there's going to be a lot of activity still out there. The Sydney market's quite solid and quite stable. I'm finding that a lot of the good cheap stuff is coming up in that Queensland sort of market. Victoria, it's just sitting there doing its thing. Yields are low, the market's pretty soft there, but no big drastic price falls. Over on the west coast, things are pretty stable over there. Once again, no big price falls there. There is some volatile markets there as far as mining that's concerned. I see that mining towns are going to be an area which obviously as we can see in the recent times, a fair bit of volatility there. I've never been a fan of mining towns, never been a fan of those very small regional towns. There's too much risk associated with them. I would not be buying in them in a good time. I wouldn't be buying them in any time, even if they were very distressed. You'd have to come at pennies and the dollars to be able to pick those things up for me. Looking at fundamental properties, I think bread and butter properties, stuff that's under 200,000 within metro cities of Sydney, Brisbane, those sorts of areas are very good and solid still, and the rental yields being there quite high as well. What is going to mean that the prices and it's a good market for 2013? There's 4 keys of what I want to talk about today, and the first one is the fact that interest rates are at a 25-year low. Interest rates currently in the marketplace 3% from the RBA, and there's some very good deals out there on interest rates at present. Where do I see that going in 2013? I see that there's opportunities there for the RBA to still be able to reduce the interest rates a little bit. We've got high interest rates compared to other reserve banks around the world, and from that I see that interest rates could come down if I put my predictions hat on. I've personally come out on Facebook and talk about it regular where I see the market heading, and I throw it on YouTube sometimes. Personally, I feel interest rates have about 0.5% to move over the next 12 months. Some people are speculating more, some people are speculating that they'll go up, some people are speculating they're staying the same. If I was to put my money on the table, and I do because I leave them variable at a certain point and then lock them in, I'd be looking at somewhere between now, if it gives you the sleep at night factor, or if you haven't got any refinancing ideas in your head, or selling the property. You could fix them now. I'm going to leave mine for a little while longer and fix them in when they come down a little bit more. My thoughts is they'll come down 0.5%. We'll see at the end of 2013 if I was right. Second thing is unemployment is still very low. We've got a very high employment outlook in Australia, and Australia is not like the other countries in the world which have got high unemployment. It could change in the future, who knows? I doubt that we will. We're a young country, we've got a lot of opportunity here, we've got a lot of people here, and we've got a lot of needs for housing, for resources, for infrastructure, all those sorts of things. So I see that there's going to be a strong continuance there on jobs and unemployment. That's my point number 2. Point number 3 is rents. Rents are at a very good point. There's some good yields out there. You can still buy properties inside metro cities, such as the ones that I'm buying, for 8%, 10% in capital cities. And that's not without any sort of granny flats or anything like that. It's just from buying properties that are well priced in blue collar, bread and butter sort of areas, which have good upside for growth. So rents still good yields out there. And sorry, I just had a little note there on the side. The final point is, because there's some outsider factors that could be put on settlement in the market, there's a good opportunity there to go into those markets, as I mentioned, like the ones that have been buying where there's distressed areas, to pick up properties below market value by negotiating well. So having bad press out there, having things that are fearing people, gives opportunity as people want to exit the current property. It may scare off a few other buyers. If you come in, be a good negotiator, be able to purchase properties well, you'll be able to pick up a bargain like that. So we'll catch up in 2013. Look forward to seeing you then, and meanwhile, have a safe Christmas.